Have you ever wondered how to buy treasury bills? Well, let's start by understanding what treasury bills are. They are short-term investments issued by the government, typically with maturity periods ranging from a few days to 52 weeks. Their purpose? To finance the country's short-term borrowing needs. So why do people invest in treasury bills? Well, their allure lies in their safety. When you buy a treasury bill, you're essentially loaning money to the government, and since the government is considered a safe borrower, the risk of default is minimal. This makes them a popular choice for conservative investors seeking a stable return. Now let's delve into the workings of a treasury bill. Unlike regular bonds, treasury bills don't pay periodic interest. Instead, they are sold at a discount to their face value. This means you might buy a bill for, let's say, $95, but when it matures, you'll receive the full face value of $100. The difference of $5 is your profit or interest. Another important aspect of treasury bills is their liquidity. Thanks to their short maturity period, investors can get their money back relatively quickly. This makes them a suitable choice for those who might need their investment returned in a short period. Why does the government issue these treasury bills, you may ask? Well, they serve as a key tool for the government to manage its money supply and interest rates. By altering the quantity and terms of these bills, the government can influence the overall economy. So, to recap, treasury bills are short-term investments issued by the government. They are safe and liquid, making them an attractive choice for conservative investors. They don't pay periodic interest, but are sold at a discount, with the profit being the difference between the purchase price and the face value at maturity. And they play a crucial role in the government's ability to manage the economy. Now that you understand what treasury bills are, you might be wondering, how can you buy them? Well, stay tuned and we'll delve into that in the next scene. Buying treasury bills is not as complicated as it might seem. It's a process that can be broken down into manageable steps, allowing anyone with a keen interest to get involved. First things first, you'll want to find a credible broker or financial institution. These are the gatekeepers, the ones who can grant you access to the world of treasury bills. You want to engage with an entity that's reliable, trustworthy, and well-established. A quick online search should present you with a multitude of options, but remember to do your due diligence. Check out reviews, compare fees, and ensure that the broker or institution is registered with the appropriate regulatory bodies. Once you've chosen your broker, the next step is to set up an account. This is typically a straightforward process. You'll need to provide some personal details and possibly some financial information to verify your identity and establish your account. It's a bit like setting up a bank account, and you may even be able to do it online. Now that your account is set up, it's time to choose the right treasury bills. Treasury bills come in different denominations and maturity periods, typically ranging from a few weeks to a year. The right treasury bill for you will depend on your financial goals and risk tolerance. If you're unsure, don't hesitate to seek advice from your broker or financial advisor. They can provide valuable insights and help you make an informed decision. Finally, with all the groundwork done, it's time to place an order. This is the moment you've been working towards. You will need to specify the amount you wish to invest and the specific treasury bill you have chosen. Once you've reviewed and confirmed your order, it's submitted for processing. And there you have it. You've successfully placed an order for your treasury bills. It might seem like a lot at first, but remember, every expert was once a beginner. It's about taking that first step and navigating the process with patience and diligence. Before diving in, there are some important considerations to keep in mind. First, consider the maturity date. Treasury bills, also known as T-bills, come with different maturity dates ranging from a few days to a maximum of 52 weeks. The maturity date is significant because it determines when you'll get your investment back. If you need your money back within a short period, you might want to consider short-term T-bills. Second, take into account the minimum investment amount. The minimum amount to invest in treasury bills usually starts at $100. This makes T-bills an accessible investment opportunity for many. However, keep in mind that investing a larger amount can potentially result in higher returns. Thirdly, understanding the interest rates is crucial. The return on T-bills is not received through a traditional interest payment. Instead, T-bills are sold at a discount to their face value, and the investor earns the difference between the purchase price and the amount received at maturity. So, the rate of return is determined by the discount rate. The higher the discount rate, the higher the yield. It's essential to understand this concept to evaluate the profitability of your investment effectively. Lastly, don't forget about the tax implications. While the interest earned on Treasury bills is exempt from state and local taxes, it is still subject to federal income tax. Therefore, it's always a good idea to consult with a tax professional to understand how investing in T-bills will affect your tax situation. Remember, investing is not a one-size-fits-all venture. Each investor has different financial goals, risk tolerance, and investment horizon. Therefore, it's essential to align your investment decisions with your unique circumstances and financial goals. With these tips, you can make a more informed decision when buying your Treasury bills. Let's do a quick recap of everything we've covered about buying Treasury bills. We've taken a deep dive into the world of Treasury bills, breaking down what they are, their benefits, and how to buy them. We've seen how Treasury bills are a low-risk investment option, backed by the full faith and credit of the government, providing a reliable, albeit modest, return on investment. We walked through the straightforward process of purchasing these bills, from choosing the right broker or financial institution, to bidding and finally purchasing the bills. We also highlighted the crucial considerations to keep in mind when investing in Treasury bills, such as your financial goals, risk tolerance, and the current market conditions. Remember, investing in Treasury bills is a safe and secure way to grow your wealth. It's never too late to start investing. Thank you for watching.